Joining me now on the Daily Ledger Page 5 beat from Nashville, Tennessee, economic analyst, hedge fund manager, and contributor to Forbes and other publications, Thomas Landstreet. Tom, I want to hear if you think we're at a tipping point. But first, the Fed is buying bonds, okay? So this is the big headlines. The Fed is buying, I don't know, a couple, $3-4 trillion worth of bonds. Where does it get the money to purchase these bonds? Does it just print it up?
Oh, yeah. Fed doesn't, it's not a business. Well, it can be a business. They can come in and buy assets like Warren Buffett when there are no buyers, and they buy them in the hole and they can hide them forever. But no, that's newly printed money, Graham. It didn't exist before. They're injecting it into the system. Back to your segment right there about Marriott. I mean, do I feel bad about them? They bought Starwood and took on billions of dollars in debt. Their balance sheet's way out of control. They were not prepared for this for a variety of reasons. One, they have too much debt. Two, they've been buying back stock with that debt. So I feel sorry for those workers. That's true. But when that guy comes crawling to his knees for a $150 billion bailout from the government after behaving like they did, in other words, taking irresponsible bets on Starwood at such high prices and taking on that debt, it's a shame, in my opinion. But anyway, back to your question. It's newly created money.
All right, but you swerved in the private sector now, and because we have to look at this in its totality, because we're talking about private sector debt and public sector debt. We just talked about public sector debt, which, by the way, at some point is going to fuel inflation. At some point, when you start printing trillions and trillions of dollars, I'm sorry, there's going to be inflation at some point. But in the private sector, you just touched on something. Here's a company, Marriott, brand name, worldwide, global brand name, but yet swimming in debt. Tom Barak, who's a friend of the president's, is a real estate mogul, says the commercial mortgage market is on the brink of collapse. What's going on there?
Well, of course, the stores are closed. None of them run on, nobody saves for it's like the tortoise and the hare, or excuse me, the ant and the grasshopper. Nobody saves. So these companies, these small retailers, these other renters, they really don't have a cash cushion. They're closed. They're laying off people, and they're saying to the landlord, I can't pay my rent. By the way, I'm probably not even going to pay my sales taxes this quarter as well. So that kind of rippled through the system. And by the way, the buyers of those bonds, you sent me an interesting article that referenced some funds that were buyers of those bonds that have now seen redemptions, and they too need a bailout. A lot of these bonds, Graham, these bond funds leverage up their portfolios. So let's say they have $100 million in assets. They'll lever that 2, 3, 4, 5 times and then go buy junk bond paper, commercial mortgage-backed securities like these, and make a yield on the levered up portion of their investment dollars. So when they lose their customers, when they lose their investors, they have to cover those shorts. I mean, they have to, they've got margin, so they've got to do a margin call. That's why it happened so violently. You and I have talked about the coronavirus. I mean, it's bad, but the deal is, it's more than debt. It's the fact that we are so, engorged with debt. We have no wiggle room. That's the real crisis here.
And so the answer to the question is, yeah, we could be at a financial tipping point. Hopefully it won't get there, but there's a chance it could. We are there. Thomas, thank you.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube. And call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.